Hey, what's up, guys? Hope everyone is great. I'm going to talk about Bitcoin. And I think that is my first video of the year. So, Happy New Year to everyone. And we have blood in the streets. But before going into that, just as usual, this is just my opinion, not financial advice, right? So, everything is probability. Assumptions that I make here are just based on my own views of the market. And obviously, everything I say is subjective to my own interpretation, right? So I can actually be very wrong about what I say here, right? So in the last video, I talked the possibility that we would bounce from this region to test the 50k. So we didn't that we didn't do that. We immediately straight to the next price levels that I discussed in a previous video. So somewhere between the quarterly open from October and the 41k as well. So we are sitting at this range, and on top of that, I can actually pinpoint this on here. Let me just use the tool here. So we have also the RSI kind of very extended. So I have a very fast RSI here that is kind of signaling super extended, so at the bottom level. So there is a high probability from a probability standpoint, aligned with the fact that we are at support levels. There is a very good chance that we actually bouncing from here. That doesn't mean that in the intraday we might see some sort of weak down, maybe tapping into the 39 or something like that, and then bouncing up to the upper side. In my opinion, that will happen. And obviously we have a kind of a series of resistance now, or at least a psychological resistance between the 46 and the 47k, which is the yearly open. So we have a confluence between some monthly opens and the yearly open, but there is also equally the chance for us to kind of pierce through that and actually test above the 50k. So but the thing that I don't like about the whole thing at the moment is really the lack of volumes. Also, another aspect that I don't like either is the lack of serious liquidation. So the liquidations, obviously, we see that there is definitely an increase in liquidations. But if we put that in context, we see that from a macro perspective, these volumes are really not that impressive, right? So that's kind of the thing that I'm concerned about. When we kind of zoom out in terms of open interest, there was no significant decline in open interest because, again, we didn't see massive liquidations. All we see probably is positions getting closed and people getting very fearful, some shorts taking profits as well. Nonetheless, obviously, we had some liquidations, right? But they are not very aggressive. So all these kind of moves down are basically not producing strong reactions in the market, and that's kind of one of the things that is making me uneasy about this being calling this the bottom, right? So my view is adapting and changing with the data that is provided. It's not because at low that all of a sudden I'm kind of getting bearish. No, is because the data is not giving me strong signs that this was a bottom kind of formation in terms of volume, in terms of the open interest, in terms of liquidation. So that's kind of the main reason. And on top of that, obviously, we are not seeing strong reactions as well. So that's kind of one of the things that is really making me reverse my opinion on the fact that we are going to see this as a bottom. I think that this is indeed opening the possibility for us to move into the 37, 35k. So we have a monthly and a quarterly open here confluence. We have obviously this zone that is a massive gap. I think that I'm not entirely sure. Let me just. I think that is CME that has a gap around this range. Yeah, exactly. So we also have a kind of a significant gap around this range on the 34 towards the 32 on CME. So that's kind of something to take in consideration. So it's pretty damn confluent between all this range as well. However, that doesn't necessarily mean that we are going to dump from where we are at the moment right now, right? I think that the technical levels here are substantial for us to see some sort of a bounce, at least to retest maybe the 46k, or potentially in a more extended push towards the 49 and the 50, and then failing and coming down and basically not finding support in the yearly open. I think that might happen as a tease for people to get super bullish, and then all of a sudden we crash down. Because from a momentum and the trend perspective, we are pretty much down. We see that all the price action is below my cloud. So we have a red cloud out that implies a bearish market ongoing. So we have the RSI also not looking good, despite the fact, though, as I mentioned in the beginning of the video, we have obviously the signal RSI or the fast RSI here at very low levels, which implies a possible bounce from where we are, a relief rally, and that could be obviously what I think to be a test of that, at least the yearly open. I think that testing the quarterly open is not going to be enough. I think that to bring the bullishness, we need really to tap into that level, and then basically coming down once again. So I think that might be happening here is maybe we do something like this, test tapping into the 39, something like that, or not, or just jump from where. I don't care about the intraday, the minimal moves that happen, right? Because it can happen anything, right? You can definitely tap into the 40, get more shorts piling in, and then all of a sudden this reverse, and then either we see kind of rejection here, maybe a consolidation, get into the zone, and then either we get rejected around here and then coming down like this, or it gets to the zone and tap into that zone and then immediately crash into the zone and do something like this, right? I think that could be one of the things that is at play at the moment. Even if I, for example, tap into the weekly. So the weekly, we also have an RSI on a weekly getting into low levels, but not extreme levels, but at low levels, very similar to this point here, right? But it can definitely print another low, especially because we are in the beginning of this trend, and obviously there is a new trend forming on a weekly. You know, the weekly for the first time, this candle here is not closed yet, but it's now below my major cloud, right? So the clouds, for those who know, are basically measuring 50% levels between the highs and lows across three different candle lengths. And this is kind of the way I look into this to kind of understand if price is trading above 50% levels or not. So it's a replacement of moving average. I don't use the moving average. I use more this kind of cloud, because it gives me technical levels, and that's why I prefer it as well. And this is at the moment is not looking good. Also, the fact that the monthly and the quarterly open is also confluent with the cloud levels at this level here. So it's a nice point around the 36. So I like this kind of confluence between the cloud and the monthly and quarterly level. So that's a good thing, which makes this as a strong candidate for a high probability support level. Again, I'm thinking in terms of probability all the time, right? So what I see, I'm not claiming that this is the support and the resistance, right? I'm saying that considering all the technical levels that we can observe, this is a high probability target zone and possible a strong support. Obviously, everything will depend on a lot of factors, but I'm just throwing out hypotheses, right? An assumption. So this is kind of looking obviously a strong momentum going, although this is at very low levels. The monthly is also kind of not looking good. Obviously, we have this level is also equally confluent with the cloud is also confluent with the weekly levels around the 35. So there is a nice confluence between different time frames, and then obviously we have this level which is kind of the 3 month and the yearly open from the last year. So this would be kind of a support level, the somewhere around the 29k or 28, 29. And we see that the RSI on a monthly is kind of still pointing down, very bearish scenario going on. So we have a bearish divergence at the moment. So we're still seeing a price printing above this low here. So at the moment we also can see that could form hidden bullish divergence. But that implies that we need to see a reversal of price for a confirmation. So it's always a little bit lagging, and on a monthly short especially is super laggy. But generally speaking, the RSI, this indicator on a monthly level, generally is very good at indicating when we are in bearish and bullish market. So we can see this fast RSI against my RSI, or we see that is in a bear, and then here the whole bull market, and then here flipped below that, and then up here briefly up, then crossed once again at this local top, was below, and then here once again crossing up, and once again here since then always be trading below. So a technical bear market with a bull trap. This is one of the things that I talked a lot in my previous videos, the fact that I did not like the fact that this was printing highs with no volumes, and basically we are seeing the result now in hindsight. It's kind of making sense, right? Because at that time it was not making sense to me. I was actually bearish at 40k, but I knew that if we broke that level, it would be very fast breaking towards to testing at least the 58. We actually went a little bit further than that. So we tested the 69k, and then now we are kind of bouncing back towards support level. So I think that definitely we are going to see this this around the 35 and the 35 levels, 37, 35, which is kind of this doji candle, which is also confluing with the support level from the cloud on a monthly. But there are so many macro things that is kind of looking bearish at the moment that there is also a possibility that we can actually enter into a more deeper bear market, and that would imply a stronger accumulation from institutionals, right? So we kind of need to be ready for that and paying attention. But at the moment, these things are definitely not looking as good, especially because of the lack of volume. So we see here the weekly volume on an index, on the Tradingview index. We are not seeing strong. It's still very steady volume, no strong reactions, no liquidations, no nothing, right? And that's kind of the thing that is making me concerned about everything here, right? So I would, in this case, say that it's probably not a good idea to buy into the technical levels, unless if obviously we kind of ready to buy with low risk and play the bounces, because there is a very a strong probability of downside under these conditions, right? So I would hope that from where we are here, we kind of see a push towards the 44, the 46, the yearly open, or a more aggressive push towards the 50k with a little bit less probability. Generally speaking, the 46 is a safety option to actually, if we are taking a long position here, to take profit around here, or shorting here, or shorting that level, but obviously with the properly risk management around this level. What we know is that we are now going against the trend, and there is always added risks when we go against the trend, right? The only good thing about longing this is because the risk reward is very favorable, right? And we can also have a very close stop level, where if we take a late trade, not only we already miss a lot of the move, we also risk of a quick reversal and getting into a very aggressive drawdown, right? So those are the things that we always need to be think the way we want to approach. There are multiple ways to go about that, but that's kind of one of the ideas. So going back into the my Coinbase chart, where I have a lot of more data outlined. So this is kind of pretty much what I think that might happen. Why I think that is we bouncing here, because we have kind of technical levels that make sense. We have a fast RSI that is at very low levels, and I took a screenshot of the trading books. Let me just kind of move into this. See if I can delete this. Maybe hide this. Right. So we see that at the date I just took this a few minutes ago. This is aggregated by 2k to $2,000 each block here, and we see that the 40 and the 38k is very well protected at the moment. So I actually need to move these, change this to yellow maybe. Okay. All right. So now it's working. So we have here around almost 2k protecting on Coinbase. So it's a kind of a significant support there, right? It really needs some big player to all of a sudden smash through these to go that. But then we have a lot of support as well down to all these levels, right? So there's a lot of liquidity down there, but in particularly now a bit the 40k there is kind of relatively well protected, and then we have the 44 with some liquidity, and then the 50k here. So these are kind of the major resistance that we can observe there, right? So hopefully this will see a relief bounce, but the signs are there for this kind of to continue to the downside, right? So I think that the playing of longs here is very risky. Obviously this is a great place, in my opinion personally, to buy spot, but if we are talking about longing derivatives like the perpetual swaps, is a risk play, but people that are basically doing that should know what they are doing and managing risk accordingly. Just know that the risks are there. We are seeing volume picking up while bouncing down. We are not seeing strong reactions, and that's kind of the thing that concerns to me quite a lot. In terms of the perpetual swaps, is going back and forward. We see that actually there is a reversal of the perpetual basis, but we are still seeing mixed signals, right? We're still seeing that most of the swaps are still trading below spot, but as recently there is a bit of a shift and there's a lot of buying activity, and maybe this is going to be kind of a bull trap, and that's kind of the thing that is concerning, because there is so many conflicting information going on. This is one of those times that when the information is conflicting, it's just better to stick and follow go with the trend, right? Understanding the risks, and if we want to play the buy support and sell resistance, we need to be aware that the trend is against there, and there are some external factors that may actually keep pushing this price down, right? So we have Evergrande, we have the coronavirus, we have all the Fed, the rates, what all this stuff can pretty much push down, and we have some reasons, as I discussed in this video. One of the things that I like, and I talked about this, is the open value in options market now is skewed toward the put side, although we are not seeing string values, right? So we are still pretty much steady. I want to see a significant rise like this, like we are seeing here, where it forms like this kind of an up trust. So when we starting seeing something like that towards the put side, that would probably high probability bottom, and at the moment it's pretty much even, obviously with a huge difference between the calls and the puts, but that's kind of over the macro perspective, this is looking bullish, but that doesn't mean that price cannot go down, right? So that's kind of one factor. Another thing that is still looking bearish is the open interest, or the open interest but wait the funding rate weighted by open interest. We see that the this kind of funding rate weighted is still pretty much in above zero, right? So it's positive, not obviously aggressive, but flat line, but above. So we are not seeing yet any sort of these moves below towards the negative side, right? So that's kind of one in the same. This is a different source, but it's the same data as well. We see that funding rates pretty much on a positive side, right? And if I just look without the weight of the open interest, it looks like this, right? So it's pretty much kind of even. Not We are not seeing strong reactions towards the downside, so that's kind of a flat kind of information. And obviously, open interest in general is high, and well, I would like to see stronger reactions on the lows, and we are not seeing that yet. So that's kind of one of the reasons that I see that these will go down. Nonetheless, I see the possibility of this bouncing up. So this is kind of really kind of a bit of a change of sentiment according to the last videos, just because of the data that we are seeing and the lack of reactions, and the fact that the way that we are coming down so fast towards these levels, and basically melting through all the orders that I keep discussing, right? All these orders are basically getting eaten very kind of smoothly, right? There's a lot of selling against these walls. The walls are not these bids are not disappearing, they are basically getting consumed, right? So there is a lot of demand in the spot markets, but obviously all the leverage that all the open interests are located in the macro sentiment, this probably is a good narrative to kind of keep pushing the price down, especially when we have trends that are basically showing obviously kind of a bearish trend going. And as people look into the charts and more people pick up on these trends, more momentum pick up as well. So that's kind of, we need to, there are times that we need to respect the trend. I think that is now is one of those. Nonetheless, I think that we might see some sort of bounce around this range, but we just need to be careful that I do not think that this is the bottom as of now, right? I need to see some more conviction, I need to see some sort of bounces, I need to see some change in the data to allow me to kind of make that sort of conclusion. And at the moment is not one of those. If we take, for example, something like the unbalanced volume here, pretty much kind of still pointing down negative, right? So this unbalanced OBV, or otherwise known as unbalanced volume, also looking very red. And this is one of the things that I mentioned a lot: the fact that OBV was looking so weird, all the price action that move above, while OBV in this case always remained below this level. All the we have a few supports based on OBV and barely managed to get above this level. So that was always something to take in consideration. And we see that weakness now, obviously, still remaining and showing that there is no strong reversal going on. So a lot of red flags going on, and that's why I think that. Be cautious with the longs. Obviously, I'm fine with buying spot. I don't care. I think that is a great zone to buy. The next biggest zone to buy is really between the 36 and 37. Below that, somewhere around the 29k, right? a little bit early. This is obviously the next target that we can talk about, but for now, the next level is really this 37 to 36, with a possibility before going there to revisit this 47 or maximum 50k, and then crash down towards those levels. All right. So I didn't talk about everything. I don't have much more time, but I think I covered pretty much a good chunk, and I hope it was a useful video. And see you on next video, guys. Take care.